Good day, ladies and gentlemen. Welcome to my channel. Today is January 28th, 2024, and I'm going to cover gold only. Gold and silver, being safe haven assets, have been one of the worst investments over the past 4 years. I'm equally frustrated to be stuck in the precious metals sector, since mining stocks must have been historically at their cheapest level given the present gold price. There isn't much left to be told about gold. However, I had similar feelings back in the summer of 2019 after being stuck in the precious metal space for multiple years. Although gold bottomed back in November of 2015, I started my first allocations to this sector early 2016. Since then, the metal was stuck in a multi-year sideways price action. And by 2019, investors in the precious metals sector were pretty tired and worn out. Today, I would like to discuss the relationship among Fed's balance sheet, interest rates, and gold price. Fed's balance sheet remained largely unchanged from 2015 until June of 2019, along with the gold price, which traded within a 20% range. Tightening cycle ended by August of 2019. However, gold broke out from a 4-year consolidation 2 months prior. Fed was done tightening and initiated a slow bond buying program. By June of 2019, while Fed was tightening, gold sniffed that money printing was just around the corner and started its move. So one shouldn't expect gold to break out after Fed starts QE, but rather shortly before the fact. Short-term interest rates topped by spring of 2019 and started to roll over by summer. Sentiment was dead, mining stocks depressed, and investors were desperate by summer of 2019, just like now. Let's move on to present times. From 2020, when gold peaked up until today, the metal has been largely trading within 20% range trade, just like during 2015 and 19. When gold peaked back in 2020, Fed's balance sheet nearly doubled, reaching over $7 trillion within a little over a year. By spring of 2022, balance sheet topped just under $9 trillion and started to roll over, and presently reaching $7.6 trillion, which is slightly higher than it was back in the summer of 2020 when gold peaked. Interest rates look like to be topping out and heading lower. If Fed is ready to start cutting rates and initiating a QE, then gold could be the primary beneficiary. With US presidential elections in 2024, 2 major wars on the Eurasian continent, backed financially and militarily by US, and interest payments on US national debt amounting over $1 trillion, one shouldn't be a genius to understand that things do not add up. Above-mentioned factors altogether could push budget deficit to a level when Fed is forced to initiate QE with a primary aim to monetize government debt. Therefore, I personally believe that US might soon initiate another round of bond buying program. If so, gold will be the one to figure this out probably first among other assets. Back in 2019, gold broke out 2 months prior to QE was announced and gained 53% within 14 months. This time around, gold could gain 50% and reach $3,000 mark in a shorter period of time, given the magnitude of geopolitical and economic events. In short term, gold is trading within a descending wedge formation, which is a bullish reversal pattern. I don't know whether gold bottomed already or might form another leg down to test $2,000 mark, but I'm pretty confident that this formation will most likely break out higher, taking gold to $2,150, $2,200 level pretty soon. This is it for today. Stay well and enjoy the weekend. And please note that this video is not an investment advice and prepared solely for educational purposes.